Let's take a look at what we have confronting us in terms of crude prices. The recent arrests in Saudi Arabia, these took place over the weekend, that is on Saturday, and they have lent sort of a leg to the crude rally. Crude prices at a 28-month high, with Brent trading comfortably above that $64 a barrel mark, whereas WTI is back above the $57 mark. So will prices stay here? Well, joining us from Singapore now is Vandana of Vanda Insights. Vandana, hi, good morning. Thanks for being on Bloomberg Queen. This obviously seems to be prompted by the events that took place in Saudi Arabia over the weekend. And whilst this could be termed as a knee-jerk reaction, do you think it might have some staying power?
Good morning. So, yeah, quite right. The $1.70 to $2.20 increase in Brent and WTI futures overnight can very specifically be ascribed to what happened in Saudi Arabia over the weekend. I would agree it is a knee-jerk reaction. However, the downward correction might be a bit slow. I think there has to be one because I do believe that it's a bit of a panic buying right now. Whatever has happened, it's essentially the Crown Prince Mohammed bin Salman consolidating his hold on power. He has been the one essentially directing and dictating the kingdom's oil policy, whether it's with regards to OPEC cuts or the Saudi Aramco IPO. So in that sense, nothing has changed. But of course, given the scale and the suddenness of the operations over the weekend, it's understandable that the market, which was already feeling extremely bullish, went into a bit of a panic buying mode.
Vandana, we've also seen some supplies come off the market, which is adding to the sense of tightening, confronting crude prices. Do you expect this to be a seasonal situation, or do you think all the conversation that the OPEC's been having with Russia and otherwise will take crude prices to $70 in the near term?
The mopping up of the excess supply and the decline in the inventories is partly secular and partly seasonal. Secular because OPEC, non-OPEC cuts, as we know, since the start of this January, they didn't really have the desired effect in the first half of the year. But they have started showing up in inventory drawdowns since the third quarter of this year. That was a report from the International Energy Agency last month, and it will be much awaited. The latest figures will be awaited later this month, which are likely to show continued drawdown in stocks through the third quarter. Now, as we go into the fourth quarter, this is where the seasonal aspect comes in. It is traditionally a high demand season, and we are particularly entering the season with a relatively lower distillate inventories, refined product inventories in general, than what was the case in the past 2 or 3 years. So those are factors that have led, even before the latest Saudi development, to a lot of bullishness in the market. And talking of supply, one mustn't forget that a very important factor as well is a pullback in the growth in U.S. tight oil output from the shale sector. So there has been a massive recalibration of the market's expectations there as well. So the oversupply situation has been easing gradually through the first half, but quite dramatically in recent months.
Okay, one quick last question, Vandana. I know a few months ago, this would have sounded fantastical, but I'm finally seeing news headlines now talking about $100 crude. Do you think that's a possibility?
I'm afraid not. I think usually when there is a massive shift in prices downward or upward, you do see a few kind of going to the absolute extremes. We had predictions of $20 when it was below 30, and every time it spikes up, you have people talking about 80 and 100. I think 100 is really too far-fetched at the moment. I wouldn't even count on 70, to be honest.
All right, thanks very much. That's always good news for a crude importer like India. Vandana there. Some insights in the crude markets.